This is Don Kaufman, and you are watching the TheoTrade evening video, August 9th, 2023. All right, the question I've got here after watching that cash close, did market volatility just awake? Look, today was a rather, if you will, innocuous trading session. Met with some really fierce sell-side activity, though, into the cash close. As you can see here, we're just about 20 minutes after the close, and SPOOs, that's the S&P futures, are down some 27 handles, which, hey, look, it's only a 0.6% decline. Not exactly all that significant. Nevertheless, there was a rather wild and precipitous drop from right around that 4,500 mark. We dropped like a rock into the cash close here, almost 20 handles into the close inside of about, 10 minutes. Got a little bit serious there. I mean, the day, when I say the day is kind of innocuous, look, the first hour or two of trading, some sell-side activity, we rallied right back up. We were massively unchanged in the day, only to see us drop with some significance. When I asked that question, though, did volatility just awake? Of course, everybody looks over at VIX. Like, I'm just going to say it time and again. VIX, looks and feels suppressed. And it actually makes a lot of sense because there have been so many option premium sellers. And a lot of those premium sellers have been rushing the marketplace in that shorter time, horizon. I'm not talking about the zero DTE, which is 0 days to expiration, but I'm talking about premium sellers that are out there, anywhere from like 20, 30, 45 days to expiration. But again, that market volatility, looking at it, it feels a little bit suppressed. Meanwhile, if you take a look at VVIX, that's the volatility index, it was rocking today. I mean, the VVIX shot all the way up to 106, contracted a bit, but again, leaves a bit to be desired, especially into tomorrow's CPI, which I'll mention here momentarily. So overall, again, the market, though, as I say, it's kind of an innocuous trading session with some big ranges, though, ultimately involved. And the reason I say it's kind of an innocuous day, let's start taking a look at some of the volume in these S&Ps. It was just, there was nothing going on. I mean, we're trading barely substantiating 1,000 contracts per minute, and that's selling into the cash close, at least from my perspective. I mean, I glanced away from the screen, looked back, and you're 20 handles lower, and I'm starting to, the only thing that actually caught my attention into the cash close is the fact that I started filling some trades. Like, I was actually filling trades. I was closing stuff out, into the cash close, and nice cash close. What a cash close it was. Nevertheless, let's start to break down the market just a little bit, other than the fact that we may have just seen volatility kind of wake up to some degree. One of the standouts here is, so the S&Ps are only down 0.6%. The Nasdaq's down about 1%. But meanwhile, take a look at the energy sector. This thing just ripped. It faded into the close, but the energy sector, the XLE, ripped to the upside, which, quite frankly, I mean, I'll look at auto expected move here. We're right to the upper edge of the expected move. Look, I got more questions about this than I have answers, because all we've heard out of China, Chinese markets are slowing down, Chinese markets now are seeing degrees of deflation. Like, how is that a positive for oil initially? When some of the original Chinese data started coming out in earlier this week, we saw some pretty precipitous sell side activity that completely rebounded. Oil continues to actually crack to the upside. Now, speaking of oil, you got to realize that, again, we have CPI coming out tomorrow morning, 8:30 Eastern time. And really, from, early July to present time, oil is barely downticked at all. I think that could actually cause some pressure to, obviously, inflation. Then again, the CPI, don't worry, it's minus any energy over there. It's two different numbers, but that one I always get a kick out of there. Just let's extract the whole energy out of the equation. But strong oil, in my opinion, is not going to be good for inflation, not by any stretch of the imagination. And the reason that I am taking a look specifically at energy is wildly strong, but it just could not support the S&Ps today. What was the selling really about? A lot of it had to do with AI. Okay. And this is another question, okay, where the AI bubble, this may be it. This may be it because we saw, okay, a number of stocks, okay, heavily focused in artificial intelligence take some substantial hits. Neither here nor there. Most of them are too small, okay, in terms of market capitalization to really make a difference. And one of the things I try to focus on here, all right, look, we're not covering stocks like Joe's tree cutting service or Sideshow Bob. We're covering stocks that actually move markets. Like neither here nor there, but Nvidia moved markets today down to the tune of almost 5%. Now you're looking at this and you're thinking that is a precipitous drop. First of all, okay, it's right in line with what was expected on the week. I just wanted to bring that up because people are looking at this like, oh, I got killed. You got killed right to the lower edge of the expected move, right? That's more of a question. That's just making a statement over here, but it's not getting killed. It's right to the edge of the lower, the lower edge, I should say, of the expected move. So, lo and behold, NVIDIA is doing exactly what it was expected to do this week. Now, any continuation of sell side, if you will, sparked tomorrow off like CPI print or something along those lines, that would be considerable. Now, granted, about 2 weeks out from NVIDIA's earnings announcement. Nevertheless, it got tagged. Okay. Meanwhile, I'm going to throw this out here for you. The fact that NVIDIA is off by almost 5% and Tesla, okay, Tesla actually coming up very close to the 240 mark. Now, 240, in my opinion, is absolutely critical. Okay, I'm going to show you a couple of critical levels here, but the point being is that big tech right now, right, is the forefront of sell side activity, and that is something that categorically speaking, you have not seen. Right? You don't have to look at big tech stocks for that. Just go look at the Nasdaq. I mean, categorically speaking, what have you seen in the Nasdaq? The Nasdaq's been the strength through and through. Okay, the Nasdaq, okay, hasn't really faded, but a brief and fleeting moment back here in like maybe February and March. It wasn't much of a fade. Okay, it looks about the same, and I just wanted to bring that up because look, if you're looking for sell side activity, you ain't home yet, and that's the point that I'm trying to make. You're not home yet. But you're like 1, maybe 2 horrendous days away from seeing volatility just explode. It's what I kind of call like volatility erupt. And that's why I was talking about like VIX earlier, almost feels suppressed. And it'll feel suppressed until it goes the exact opposite direction. It's like get a blanket over your head and you're trying to break free, it will break free. So you got to watch NASDAQ, okay, literally Thursday, Friday this week. And it's not so much about CPI. CPI, I was talking about this kind of earlier in the week, but CPI, right, is just lighting a fuse. Markets, okay, every day they're just getting chocolate-covered hand grenades thrown at them. And I've been using that, terminology frequently because all that these announcements are, and this CPI report coming out tomorrow, it's big. It is absolutely big, but it's just another fuse, okay, thrown into, obviously a marketplace that has been suppressed in terms of volatility for a long period of time. It's not a good combination. But when it comes down to it, if you take a look at auto expected moves, the auto expected moves says a lot more, okay, than I ever could. So, you're 2 weeks away. You're hitting the upper edge of an expected move. Last week, we cracked the lower edge of the expected move. This week, lo and behold, we're only about halfway home, okay? And again, I wanted to kind of confront the reality. We're only about halfway home to the lower edge of an expected move. I think this week, if we start to actually hit the lower edge of the expected move of the NASDAQ, then sell side activity becomes that much more real. Okay. So Tesla, and I want to bring this up, the 240 marker, you get below it, things are going to get real, and they're going to get real in a hurry. Okay. NVIDIA doing exactly what it's supposed to be, right? Other interesting aspects over here, Microsoft. Let me bring up Microsoft. Continues to see sell side. I've talked about the 320 level for a considerable period of time. Look where we are right now. We're 322. Like, look, the stars are kind of aligning. The VIX feels suppressed. Okay. A number of marquee tech stocks, like they're not on the ropes. They're definitely getting pushed. Okay. They're definitely getting pushed over here. And, stocks like Microsoft and Apple are both, okay, in truly corrective territory. It's more than a 10% decline. Okay, so we looked a little bit Nvidia and Microsoft and Tesla, normal expected moves for the most part. Obviously, we looked at the energy sector, which is the energy sector, ironically, is what held the markets together. Okay, and I think the biggest one that's got a question mark behind it is the financials. The financials receive all kinds of downgrades from Moody's. Boy, Moody's, you haven't heard about them in like 100 years, and all of a sudden they're out there taking swings at everybody. But if you take a look at the financials, where are the financials? For the most part, massively unchanged in the week. Okay, so the damage inflicted to the financials, there has been no damage for the most part. Okay, they're basically unchanged in the week. There's a lot of risk coming in to tomorrow's CPI. Let me show you, okay, why there's so much risk. Obviously, you now know the players, right? The players are going to be big tech. Big tech, it's getting pushed. Again, they're not on the ropes yet, but there's some key levels that are being hit, if you will, in the marquee underlyings. This, okay, is the SPX. And this is now cause for concern. So you see some sell side, and it was fierce sell side into today's close. But are you aware that the SPX, the SPX is basically at 44.80 at the start of the week. Where are we right now? 44.67. For the most part, we are massively unchanged on the week. Want to know what the expected move is, though? The expected move for the week is plus or minus roughly $78. So why the cause for concern? Because in any given week, there's a really high probability we hit the upper and or lower edge of the expected move. Okay. And when I asked that question, did volatility just awake? You may have actually seen some today, but believe me, okay, in the next two trading sessions, things are going to get a little crazy out there. And as I said, it's not necessarily what the CPI number happens to be. Personally, I thought it would come in a little bit hot, but we'll see. Again, China just released their CPI, and they're actually showing the exact opposite. They're looking at deflationary pressures. Okay, neither here nor there. It's just they're going to light the fuse tomorrow morning at 8:30. Like, it is what it is. And we don't necessarily have to rock right off the CPI number, but you got this $78 expected move, and we're basically unchanged. And there's a really high probability getting all the way up here to 45.60 or down to 4,400. Now, remember, the levels I'm giving you are in the SPX, not the S&P futures, in the SPX. The last thing to mention, the expected move for just tomorrow is just shy of $40. So people, bottom line, put your helmet on. Put your helmet on. Keep it on. We've actually got some volatility that we are going to see, because market volatility very likely just woke up. All right, that's it for this evening's video. Stay tuned. I'll be live first thing in the morning tomorrow, Friday. It's on, people. We got some volatility in this marketplace, and I'm rather excited about it. Some two-sided market activity. Have a good evening, everybody. Bye-bye.